Morning, everyone. It's Chris from Axel as well as Solstice. You can find us on X, used to be Twitter, Instagram, as well as Discord. Remember, we use this adaptive algorithm for the side market, up market, as well as down market with no bias. We're not a broker dealer. Smash the like button. Let us know what you think about the video and if you like some formats or changes the way we present the weekly video. Let us know what you think. Let's go to the first slide that I have up here. I put VU, which is Vanguard S&P 500, instead of using the Spiders SPY. I put the overall different sectors. These are the monthly candles, which represent 1 month on the charts. So it gives us an overall view from 2016 till 2025, where the S&P 500 has moved quite a bit from the March 23rd of 2020 COVID and going up to the 2022 to 2023 lows, the reset in 2024 where we broke even and eventually in 2023 and we broke up in 2024, came back, retested that consolidation at the basically 440 area and bounced off it very nicely. But we are in an uptrend so far, even with all the noise. This was the tariff news right here when we got the tariff between United States and Asia. When Trump declared it, we fell all the way down and we reversed back up. Ever since then, the tariff has cooled off. But in the White House, there's a little bit of not a dispute like husband and wife fighting, Trump and Elon. And Tesla got a little bit hit. There's most interest is between 275 and 245 on Tesla. Are they people hedging their positions for the long-term haul to purchase Tesla at a lower price? Let's see what the outcome comes from the Fantastic Seven, which are Apple, Amazon, Meta, Microsoft, Google A and Google, as well as, NVDA, Tesla, and I included in there Netflix. Remember to take a look at all these sectors that I put here for the next coming month. I noticed on Friday there was a lot of rotation from tech. It went into small cap. IWF is the growth. IWD is the dividend yielding Russell 2000. IWM is the Russell 2000. IWN is the value play in the Russell. Pay attention to those sectors with ARKF, as well as the transportation, the DJT, the tech sector, as well as the AIQ, which is the AI, semiconductor, XLK tech, the growth IYW and SPYG, which is the growth in the S&P 500. And make sure you pay attention to Bitcoin as well as the Nasdaq in relationship to small cap and the S&P 500. Let's go to the next slide. And what I did here, I basically showed the S&P historical rate of return after all noise has been done, because the monthly chart on April lows that we created, that big hammer, if we take a look at historical rates, it does not have to be the same. I just wanted to show the outlook after a 2 year, a 3, 4, and 5, what the average medium rate of return compounding would be with the volatility that's happening in the market on the short term, which is around 80%. Let's call it 79.2, and the 2 year range is 31. The 6 month is about 10. 3 months is 9.9, because we have recovered part of the S&P from the low from April and May, and we are right now in June. Let's see what June gives us in summer in relationship when we get to August and rebalancing in the portfolios. So remember to check us out at Solstice ATR or Axel. Get in contact with us, smash the like button, let us know what we can do to help you out. Let's go to the first slide, and what I did here, I put all the combination of the Mega 7, including Netflix in there, and I wanted to show that inverted cup and handle. This is, I consider, rounded bottom. You created that big one with that, including these two, and we broke out of here. We rallied up, but we here getting a little bit exhausted. You can see I put the mid-range between the linear regression uptrend channel and the low, and we kind of grinding up here, but it's getting a little bit exhausted. I am paying attention to either the CCI or the stochastic or the RSI or a MACD in order to get the ranges from highs to lows with the Fibonacci retracement. That's the 116, that's the 50, that's the 200, and that's the 250. When we tested this on the weekly chart, we bounced off quite a bit in the 50 and the 18 cross. This is a bullish cross. When the 18 and 50 cross down, that's the bearish cross. We are in consolidation, a little bit tired on the chart, so I'm going to remove that mid-range out of here. What I want to do, include this one up here to the for that linear uptrend channel. If there's any opportunity on resets coming back to that linear regression downtrend channel and breaking through the 18, I'll look for the backside of this consolidation here. If not, you'll look for the backside of the breakout from that 3,350, let's call it, more or less in that area on the combo of those. But let's remove this from here. And what I wanted to do is put Tesla, but in isolation, in relationship to all that happened in the White House this week. And you can see I had the annual charts on the retracement on Tesla, and I can go back 2 years to show you how this looks like. I can go in the custom, I can go to style. In the in the daily, I can go to time frame. You can see, instead of daily, you can go custom. I can go to 2024, beginning of 2024, on a daily chart and push OK. What it'll do, it'll show me the annual fib from the low to the high that I did. And you can see when we came back to retrace to that area, we got a nice retracement after losing that 313 area. We came back to that 38.2 fib, or 61.8. You can see the Fibonacci, and it bounced quite dramatically right back up, and we had an inside baby candle inside that engulfing candle. If we cannot clear F3 from the highs and lows, this is the 38.2 coming back through here, I look for the 245 where the consolidation in this gap is, for an opportunity to look into Tesla for purchasing a position, see if it holds and continue higher. So I am not biased, but I wanted to show this in the charts because it had a nice rebound at the 270, 240, and once we lost it to 313.67 on Thursday, because due to the what happened between Elon and Trump in the White House. This is what the overall sector on Tesla. Remember, Tesla is a technology company. It's not a car manufacturer, but you have to understand the technology behind it, and there's going to be an opportunity for it to purchase at a lower price if things do tend to go in that direction. Let's take a look at the XLB, and I wanted to start with the material in the sectors, and I wanted to go back to 1 year instead of all the way down there. Let's go to an intraday 1 year. I don't have to go that far. You can see after that consolidation, we have not even cleared, coming from highs to lows from last year. We fell down to the 50% retracement down. We bounced off. We cleared the tariff noise. We consolidated here, and we're starting to break out, but we have the 200 SMA and the 50 Fibonacci from the last year, because this is a large consolidation in this area. In order to continue, you look for a breakout for the 91 area. If not, you pay attention for the backside of the 116, and if 85 does hold in XLB. Let's take a look at the XLK, which is the technology sector. You can see on Friday, after the buy, the all that noise that happened on Thursday, it had just a star there. Pay attention. Let's take a look at the semiconductor SMH. Oops, SM. Oops, I keep SM. We can see in the semiconductor right here that there is consolidation, and I wanted to go over all these to show you that this was in the prior year. You can see we went sideways for a long time, and in 2025, after we fell back down, we coming back to that consolidation where a lot of volume and value has been built in this area. So we have to pay attention to that technology. Let's take a look at the AIQ, which is the fund for AIQ. I believe it's AIQ. Yeah, AIQ. You can see, because this is the AI Technology Global Fund, we can see that it did create that breakout up here, but we had basically, this is the big candle that we fell off in February, brought us all the way down to April. We rallied and we eventually broke up. I am paying attention to this gap, if there's going to be exhaustion or there's going to be continuation in the tech sector, and especially the AI sector in the overall market. But what I wanted to show here in the IWF, which is the small cap, I know I did this video a little bit differently today. I showed that the small cap Russell Growth 1000 is basically doing a nice reversal high, and we had this big gap after the tariff noise coming down. We broke out of here. This gap is very important, and there's another one between here and here. You can see it. I would mark this area as an important area if the small cap IWF comes in here. And what I wanted to show you is that the IW, look at all the other ones on their own separated. You can see the Russell 2000 has not even been able to clear the 200 SMA. It broke out of the 210 area. Let's call that. It just had a little push up. There's going to be probably continue, even if it consolidates and comes back to the backside of this channel and the 116 SMA and breaks up. I'm looking to take care of this candle here in this large consolidation at around the 220 to 224 area. That would be a good area once it breaks out of there and continues higher. So I am looking at small cap for accumulation in that sector. Let's take a look at right now BTC, which is Bitcoin. I'm going to use the micro BT and work my way backwards. And you can see when I said last week in the prior videos, we are forming that inverted head and shoulder. I considered this was the W here, which was the consolidation. We looked up and we failed. We did a double bottom. We rallied up, and I said, hey, be careful of these three tops if we're going to consider them three tops on the weekly. And I said, in case it does create a right shoulder on the right, pay attention to it. We had an inside candle on Friday after falling down in the overnight, and on Thursday we had an inside. Basically, a lot of people got caught short into the position, covering their position back on Friday on an up candle, but this is an inside candle of the Thursday candle. So I am paying attention in case it doesn't break up to the upside, and if it does, that's great. If not, and it does hold the 100,000, that is great. If not, I'd look for the 50 and the 30, between the 38.2 Fibonacci and the 50. I would grab something here in this position where there was a lot of consolidation before the rally up, falling down, consolidate and rally up. If in case it breaks up, that's great. If not, look for the backside in this area where you can get BTC. Let's now take a look at the isolation micro NQ, and what I'll do the measured move on micro NQ as well as the S&P 500. You can see that we had in the last 3 weeks consolidation, look above, fail, look up, come back in, and Friday we had a nice reversal candle in it. This is the 5-day range in that candle in the prior week's range. So we are trying to get above this area here to see if we can clear it and continue higher or not. But pay attention to that tech sector in the Nasdaq 100, and I will show you the micro ES, and I'll do the both measurements on both of them. We can see after the tariff, this was the tariff breakout. We talked about this gap, the look above, come back to it, bounce off and continue. We had this April low. There was a nice reversal here at the 41.50, at the 51.45, and we had called it in the group and we said pay attention to this low in case we do end up in this area and bouncing back up. That's going to be a very good opportunity for us to continue. We had this professional gap, we had this consolidation where we fell from, we rallied up, we broke out of it, and we looked up, and we are in consolidation here, but we are still in an uptrend. We are holding the 200, 116, 250 and the 50 SMA. The 50 SMA on the daily is away from the 18 when it crossed here, which is a bullish cross. That was the bearish cross bringing us down, and the reversal back up. I am paying attention to that area in case we clear these two candles. We'll look for the upside of the 61.75, 61.45. If not, I'll look for the backside of the reversal. I do have these virgin control points which I posted here. I left them there from the prior weeks when I showed you how to use the monkey bars. Let's go now from the daily to the 4-hour charts. And what I want to do, go to an intraday. We can use a 10 or 15-day range or 20-day range. We can go to 6-hour chart or 4 hours, it doesn't matter. What I wanted to show you here, the consolidation between the overnight as well as the daily. The overnight is the gray area, the trading hours are here. So we look for the prior week's high to the low, which is Monday through Friday. Sunday through Friday for every week. We'll do the measurement tool from the high to this low down here, which was the Sunday lows for the week. So we can see in this consolidation where we fell from, even coming, this is a virgin control point. That's a virgin control point. I did not mark the VPOC, which is here in this candle, because we had inside days that were, violated. We came down. We probably have one here and there's one up here. So we do have a couple of them on the way up. So the extensions to the upside would be the 200, 180 to 200 and vice versa coming back, but minus 80 to 100. That's an opportunity to buy. Let's see what Monday brings. And you can see that Monday was a bullish up move and we had the CCI breaking out and coming higher on the 4 hour. Let's take a look at the measurements on the Nasdaq 100 micro NQ. And what I wanted to do is do the same thing here from the highs to this low. This will give you kind of an overall way there is opportunity to buy and sell in relationship to support and resistance. You can pay attention to the 18 as well as the 50 SMA, which will come up this way, and the 18 will be coming every year. Let's see what Monday brings, and most importantly, trade what you see, not what you think. And you can see the Nasdaq have been having for the last 3 weeks after this breakout and this gap in here between here and here, that there is an opportunity even coming back to that big candle here is an opportunity to buy. But if there's going to be continuation and you consider this is a rounded bottom and this is the handle of it, if there's a breakout, that's great. There's going to be more continuation. And you can take a look at the, other than the NASDAQ 100, you can take a look at the S&P 500. I have listed here all the sectors in the S&P 500 in relationship to the moves up and down. So trade what we see, not what we think, and that's very important in trading. And I wanted to show you here how to look at the monkey bars, and I'll review them for a minute. We can go to here in the style. We can go in the charts. We can use the monkey bars, or they are called volume profile. In relate, you can see this is a daily chart on 3 days. This is the V point of control, which was visited on Friday. This is the time spent. You can see between the highs and low, the time spent was a little bit lower than the highs and lows. So the sentiment is supposed to be lower, but does not have to be. This is on the Nasdaq 100. This is the time spent, value high, value low, and the time spent here between in relationship to the value high, value low at the most volume is, and the point of control is where most volume is. If I take the measurements from high to low on Friday and I go get the Fibonacci from high to low, I can get the highs. Just we're going to average it out just so everyone can see it. We can see that the 50% is a little bit above the time spent. So the sentiment is lower, but doesn't have to be. It's almost 50-50. It's between, let's call it, 53% to 47% sentiment is basically more on the 53% sentiment is lower than being to the upside. So we're going to trade what we see, not what we think. And I just wanted to show you this on the volume profile using it. And if you want to learn a little bit more about it, how to use it, and I'll show you micro ES. And you can see it's in the same situation that time spent between the highs and low on Terza was basically 50-50. So when we looked down on a Friday and rallied back up, it gave us an opportunity to buy the dip and rally it back up to the top. So basically, we're going to trade what we see, not what we think. And the close was at 61.10. So let's go back in style. Go from style back to standard, and you can get an overall view on the S&P 500. On the micro, you can see where the measurements are. If I go to the daily, you can see that consolidation in here has been consolidating in this range until we break out of here, which we did. We are above the 55, 59.93, the 6,000 and the 8 here, and we closed at 6,010. So we're going to pay attention to that and the 18 SMA in the backside of this channel in case we come back to it and bounce off. If there's going to be continuation, you look for the upside of that channel and the backside of the between the the 80 and the 200. If not, if there's going to be continuation, I will be looking for the upside of that channel or the bottom channel. So I'm going to show you how to look at it this way without using the breadth of the market or the ticks. Oops. Mark one. Why is it dark? Is it dark? Is it one here? Let's see this. Okay, duplicate it. Duplicate. Probably because it's a little bit on the high end. So you can put both markers there to see if there's going to be opportunity on either side of the charts to trade those channels. I hope this video was very helpful. If you have questions, please let us know. Get in contact with us. We're here to help. Take care.